number of options that Parliament is considering. It was interesting to see John Bercow, the Speaker of the House, at an Edinburgh Fringe event this week, in typically sort of fighting mode, saying, this cannot be allowed to happen over the wishes of Parliament. So sort of suggesting that he would use his office, which I think we can expect, to try to facilitate no deal. Now, how can they do that? They would have to be able to table legislation that would force the government to seek an extension. And, that was done under Theresa May. It's not quite clear that they can do it so easily now. You have to take charge of the order papers. There's a chance that in the House of Lords, it could be procedurally blocked through filibusters. So, is it possible they block a no deal? Yes, but it's not a straightforward route, which I think is why you're seeing that 60-40 percentage.
Therese, it's August 15th. Have you picked out your Halloween costume yet? How close is October 31st?
Gosh, it's looking, closer all the time, Tom. And I think we've even seen some conservative MPs against no deal tweeting things like, we don't see any way out of this. But I think the one thing we've seen from this entire Brexit saga is that things can change very quickly. So, let's not rule anything out.
My quick read of the British press overnight is Hammond is the new pinata. How's the former chancellor doing?
Well, a lot of people will point out that, Hammond didn't do everything that he could have to block no deal. I think it's really suiting the Johnson government to paint Parliament, and now Hammond is part of this parliamentary opposition to the people's will. This is clearly how they plan to fight the next election. And in some ways, I think Hammond just played right into Boris Johnson's hands.
Very good, Therese. Too short an update. Thank you so much. Therese Raphael, brilliant writing for Bloomberg Opinion on the United Kingdom. We will continue with Mr. Strobach of Credit Suisse, Mr. Frieda of PIMCO as well. We need to do a data check, and that first line is what you need to know. Green on the screen before the Chinese headlines of their upset over President Trump's actions. We go to red on the screen on equities. 30-year bond, that is history making under 2%. As well. Deutsche Bank, a challenging day. This is Bloomberg.
Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Bill and I always look for any philanthropy we do to fill some of those gaps.
I'm Emily Chang, and this is the best of Bloomberg Technology. We're reviewing you all our top interviews from this week in tech.
I think Facebook's how we won in a lot of ways.
Do you ever take any of the tips and give them to your LA Clippers coach?
No! I will stand up for Canadian interests. I will only sign a deal that is good for Canada.
Coming up on Bloomberg Best, the stories that shape the week in business around the world.
Welcome to Bloomberg Big Decision. Really good to have you here.
Thank you so much for having me today. We know this business inside and out.
You've really built a conglomerate.
We saw amazing opportunities in the Middle East.
They had the dream. You had to bring it to reality.
Between the three of us, we can really do anything.
I feel like this is where we should go.
actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
This is Bloomberg Surveillance. I'm Renita Young. Let's get the Bloomberg Business Flash. Warren Buffett's Berkshire Hathaway has increased its bet on Amazon. Berkshire's stake in the world's largest online retailer rose 11% in the second quarter. It's now valued at more than $1 billion. Still, that's far smaller than Berkshire's stake in Apple. That investment is valued at more than $49 billion. Morgan Stanley is nowhere to be found on the year's second largest IPO, WeWork. Bloomberg learned that the firm has stepped back from a lesser role in the deal after WeWork rejected its pitch to be the top underwriter. The relationship became strained when Morgan Stanley wouldn't extend as much debt financing as WeWork wanted. Shares of Cisco are falling today after it came out with a lackluster forecast. It's a sign that companies are holding off on updates of their computer networks. Cisco is trying to become more of a software and services provider, but the majority of sales still come from the machines that are the backbone of the internet. And that's the Bloomberg Business Flash. Francine, Tom?
Renita, thank you so much. We don't need a chart. We don't need a morning must read. We've got the wall of worry. It's slapped on a wall of bricks as well. I feel like I'm on Jeopardy or something. Gene Frieda, Brexit for 2, Brexit for 200, negative pile debt. I mean, come on, folks. Here's the wall of worry, and it's absolutely textbook. Let me go to Michael Stroback of Credit Suisse with Gene Frieda of PIMCO. Michael Stroback, I got to invest for Monday morning with this going on. What do you do in a retirement plan at retail or, frankly, institutional when we're playing Jeopardy with a wall of worry?
Yeah. Well, first of all, did you figure out how is your time horizon set versus all of this? And I would argue still that we're in a world where risky assets will give you a decent and or even handsome risk premium. I mean, we're stuck with a very decent equity allocation in our sort of typical client portfolios, feel very comfortable with that. Markets always short-term have a wall of worry to climb, and I like actually, honestly, to be that out in the open so that we debate it and climb it and know what risk we're dealing with.
Within the wall of worry and within Europe, Gene Frieda, is the ever greater negative rates. Francine Lacroix has that great negative rate build-up chart. When the price is up like this, what's the temptation to just take the gain and go to cash?
I mean, I think inevitably it does go up. You know, that is a rising temptation. I'm probably a little bit more cautious than Michael in saying that I worry more about, you know, risky assets. I think, you know, because of the dependence on central banks, we're leaning very heavily on them to keep risky asset prices inflated, and we're doing that by pushing bond yields down ever more. So that to me doesn't mean that, you know, risky assets are cheap. It means that they're pretty inflated. So I don't really feel like I really have much of a margin of safety. And it does make me want to, you know, be very cautious.
I also want to go back to Brexit and kind of how you play Brexit, because, Tom, we have a diverging view on the London set. Michael thinks that there actually is a little chance of a no deal, whereas Gene thinks that a no deal is, I don't know if it's a high probability, but certainly something that we need to be mindful of. Discuss.
I mean, you know, our probability is now around 70% of a no deal. I think we can talk about nuances as to how hard that no-deal Brexit looks. So there's something to discuss there. But I think, you know, this has always been about domestic party politics. You see it on the conservative side in terms of the desire to unify the party and effectively kill the Brexit party. And you see it on the labor side in terms of, you know, it's not really about creating a unity government. It's about basically gaining power. And as Therese said earlier, that's been kind of thrown under the bus.
Right, but Michael, you think that actually this is all gaming from Boris Johnson and that the EU will give in?
I think there will be a blink. It may be on the 31st of October and or beyond that, but the parties need more time. And I think Mr. Johnson knows that the clock is ticking down and that ultimately something has to give, but I don't think what has to give is a no deal that crashes the UK out, triggers a recession, triggers a risk event that nobody today is positioned for. I think the parties will find a way of extend, maybe pretend a little bit and find a solution.
So, Michael, you don't think that the market is pricing it in?
No.
So do you think it's pricing in?
No, I think it's obviously moved to a certain extent, but I think, the point there is that almost all roads lead to persistent uncertainty, some more extreme than the other. Even if we have some kind of deal, we're going to have a long period of uncertainty. Yeah, things will be better, things will be smoother. But the place where you're going to see it priced most is in the currency. The currency has been weakening. We could imagine euro sterling at parity. We could imagine, sterling at parity to the dollar in a hard Brexit scenario. So no, we don't think it's priced yet.
Gene, how is credit doing? We've spent the entire hour on full faith in credit. How is the credit, the corporate part of the market?
In the UK or globally?
Well, investment grade and high yield as well. How is it?
It's starting to come under pressure. I mean, again, this has been where, you've had, I certainly wouldn't call it a bubble, but you've certainly had excess in that sector. Spreads look very tight, get relative to the economic outlook. They've been inflated by central bank purchases. So, rightly, we think they should come under some pressure, and they have been coming under some pressure, but we don't think they're particularly cheap yet.
Michael?
Oh, and we've taken our credit allocations down a bit. Honestly, spreads are still decently low, and I don't think that part of the market is where you want to be. I actually prefer more equities than credit.
Very good. We will continue. Michael Strobach, thank you so much for the hour. And Gene Frieda, as always, with PIMCO, thank you so much. An eventful hour. We started the hour with substantial green on the screen. Right now, futures at -4. All of this off of China headlines. It's simple. The headlines say it all. They are looking at some form of retaliation, and they don't mince words about a 10% tariff. They don't mince words about the memories of Osaka. In our next hour, Russ Kosterich of BlackRock. This is Bloomberg.
Stories this morning in D.C. and
the Dow and the S&P.
Shall we? So the euro on a 7-day winning streak. Moves in the currency market, which is down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
U.S. and Japan duke it out over exchange. China's slumping onshore bond market is great.
morning, there is a shortage of bonds, as at one point all U.S. full faith and credit falls below 2%. They are there now. There is a modest bid to stocks. Well, that disappeared. The yen weakens.